And now let's go over to our man, Mr. Chris Gaffney. Chris, folks, of course, you've heard him many times on TFNN. He's the president of Everbank World Markets. As you come over to our website at TFNN, you can see the Everbank banner on the right-hand side. Just hit that banner, and we're going to bring you up and walk you through a couple different investments that are pretty cool, and that, you know, when you look at Everbank, they're at the cutting edge of a lot of these different types of investments that you very well may want to take a look at. Chris Gaffney, welcome back to TFNN.
Well, thank you very much, Tom. It's a pleasure to be here.
It's great to have you, man. And, you know, the last time that you were on, and we do appreciate that you gave us a heads up that Everbank was coming out with one of your Marketsafe CDs. Yep. And if you can walk the folks through this, because this is so intriguing, but if you can walk them through it first as to exactly what it is and how it works.
You bet. It's called our Marketsafe Future Economies CD, and it's a CD that's going to pay an upside based on the performance of 6 different currencies. And those currencies are going to be the Brazilian real, the Indian rupee, the Chinese renminbi, Mexican peso, Indonesian rupiah, and Turkish lira. So these are emerging markets currencies that can be pretty volatile and yes, are actually pretty tough for investors typically to get direct investments into these currencies. And we group those together and put them into this Marketsafe CD. It's a 5-year term, so it's a 5-year CD. It's not one that an investor can break prior to maturity. So it is something that you need to be committed to for the full 5 years.
Sure.
But the unique item and what makes it especially attractive is the fact that it's a Marketsafe, and this means that while you can get 100% of the potential upside of the average of these currencies, you have no downside risk. So your principal is protected. You will be guaranteed to get your principal that you invest into this CD back at the end of the 5-year term.
You know what's amazing is that, and of course it's FDIC insured, right?
It is FDIC insured, yes.
You know what's really cool, and when we were finishing up last time, I was bringing this up. You know, we know that the interest rates have been very low for a long period of time, and I was doing the numbers, and folks, what happens with the CD, which is really cool too, I'm going to use a $10,000 figure, but you can open the CD with $1,500, so you don't. Right. Now I'm going to use $10,000 just in general, because I know people like, you know, people like the CD market. That's the bottom line, because you know you get your money back, right? That's important. You know, but when we got off last time, I was doing the numbers. I says, okay, so probably the biggest CD rate in the country, the average is maybe 1.2. Let's say it's 1.5 in general, right? I'm saying to myself, this is pretty amazing, because at 1.5, yeah, you can make $1,500 a year. And you know, the audience you're speaking to out here, of course, they're in the markets all the time. When I look at that, and then I look at the aspect that, okay, I have 6 different countries, and the upside, you know, there's no guarantees. We know that. There's a guarantee you get your money back. But the upside can be a lot more than 1.5%. That's what's kind of cool.
And at 1.5%, that's actually $150 a year on a $10,000 investment. So it's even less.
Shame on me! Oh my God! Okay, yeah. That's wicked! Oh my God!
So, but you're exactly right. No, it is an investment that it can pay off, you know, on the upside, and there's not much opportunity risk. You know, that's yes, what we call opportunity risk. Is you're not giving up that much for the potential of getting a whole lot. You know, if these currencies rise. Now, this also, we put a little twist on it. It's got what we call a jump note structure, which means that if these currencies rise just a little bit, let's say they rise 2% over the 5-year term,
yes,
on average versus the U.S. dollar, we're going to pay a 10% upside. So
I saw that.
If you get any movement, positive movement in the currencies at all, you're going to get 10% over the life of the CD. If they go up over 10%, we're going to give you all of that upside. So if they go up 15% on average, you're going to get all of that. If they drop, if the average of the currencies drop so that you know, the average of these 6 currencies fall versus the U.S. dollar over the 5 years, you're going to get the return of your principal back. So, there's 3 different return scenarios. You either get your principal back, you get 10%, or you get over 10%.
And folks, as you come over to the website, so just go to TFNN, and bottom line is that you can, if you're in your car, you'll go to everbank.com/TFNN. And when you do that, hit the investing button, and you're going to see Marketsafe CDs right there. Now, what Chris just brought up is really cool, because I was going through the term sheet, Chris, right? And what happens, folks, is that when you bring it up, you'll just hit the don't miss out, and then hit the term sheet, because you'll see what Chris just explained. And I was looking at that, and that is so cool, man. It's amazing. And now these are also IRA eligible, right?
Great point. I was going to bring that up. Yes, you can put these in an IRA. You would open up an IRA with Everbank, and then we can transfer a portion of your IRA. The key with IRAs is, again, because we can't break these CDs, you can't withdraw funds from these CDs for the 5 years.
Yes.
You need to make sure that you've got other IRA funds in case you need to take a distribution, because you're not going to be able to take a distribution in these. But yeah, they are IRA eligible. And again, it's a longer-term investment.
Sure.
It is getting exposure to some real emerging markets that have some real potential. Now, in these currencies, a lot of them have been beat down pretty severely. We've got a very strong dollar right now, and everybody's been talking about how strong the dollar is. And the question is, when is that going to peak? When is that dollar going to peak? And sometime in the next 5 years, are we going to see a turn in that? And are we going to see, as you know, the pendulum swings one way too far and then the other?
Sure.
Are we going to see that dollar turn in the next 5 years? And this is a way to take a view that you think that dollar is going to weaken, but you really don't want the risks that are usually associated with these emerging market currencies.
That and the risk of trading currencies in general, right? I mean, there's no doubt. You know what's really cool is that what you just did bring up too. I mean, and the audience knows that this run in the dollar has been extraordinary. There's just no doubt. And listen, it's a great run. But guess what, folks? We went from 80 to 100 on the dollar, about 100.78. And we know long-term trends, they trend for a long period of time. We've been trending now for almost a year and a half up there. Nice setup. I mean, how do you put something like this together, Chris?
Well, as far as the ideas, we listen to our clients that call into the desk, trading desk. We work with other folks that we figure out where we believe there's a need. We've had a couple of them with metals. We constantly try to figure out what the need is, and then we cover the appreciation potential through the purchase of option contracts and hedging instruments that we do with third parties. So we're not taking the other side of this necessarily. We're not betting against our clients. We're not going on the other side. The regulators make awfully sure that we're hedging our exposure on these, that we're not just taking the other side. But
no doubt.
We've had several of these. We've had, like I said, a couple of them were tied to the metals, and as you know, we had a tremendous run in metals prices for a while there that really had nice returns. Now we've had others that are tied to Japanese real estate at one point, and that one didn't pan out so well. But again,
cool,
the key is it was a market safe, and those investors, if they would have directly invested into those Japanese real estate market, they would have had their heads handed to them. Instead, they got their principal back. So
amazing.
That's how it works.
No doubt. And folks, as you're over there, okay, that product may be good for you, may not be good at this particular time. But if you're going to Europe or you're going somewhere else, what I'd suggest you do is this. When you hit the investment button, the foreign currency bank accounts are also dynamite bank accounts, okay? Because what we have had, I mean, if you go into Europe this summer, the euro just went from 139, or 108, bottom line. you could be really a market maker and just go delta neutral. And that just means if you're going to spend $5,000, go put the money into that account and put it in a Euro account, man. Listen, Chris, thank you so much. We really appreciate the education and,
And one last thing,
yes.
and I don't want to sound, this is a limited time offer.
May 7th.
I mean, it's our funding deadline is May 7th. So if you're interested, go out there and take a look at it. Click on the link, and if you're interested, you better act.
Oh, I'm so glad you brought that up. No doubt. May 7th, folks. It's everbank.com/TFNN. Chris, have a great one. Have a safe one. Look forward to speaking to you again.
Thanks, Tom.
Thanks so much. You stay right there, folks. We're coming right back.